Okay, stock market time. So I posted a chart yesterday, I think, to show you what's going on. So, if you haven't seen this already, then I've shown this before, like a long time ago, probably last year, and see how long it's taken to play out. Because at the time it was really, really close, and now we finally looks like we've got the crossover. This is called the cross of death, I think, the death cross. So basically, the gist of it is that this is the 50-day moving average line, the orange one, and the blue one is the 100-day moving average line on the weekly chart. Okay, so what's happening is when we see the 50-day cross into and below the 100-day moving average on the weekly, it's basically signaled a big significant down move. Okay, and this has happened already in the dot-com bubble, and it happened in the GFC. So this has happened already, and you can see by looking at the chart, you can see that there's similarities. You can see how every time we've crossed into it, we've just recently put in a high, okay? Some kind of structure high. Same here too, we put in a high and then we crossed and we went bang, bang, right down again. Here too, we put in a high, but in this case, the only difference with this one is, there's no difference at all really. And we're just, we're kind of at this level where we're looking at, it's a reversal down, so at least we're going to go down to some levels down here. Now, this is a weekly chart, so this could play out as early as this week, or it could play out as early as next week. Who knows, right? The point is you just want to be prepared for that, because I think the next stock market move is not going to be pretty, right? You can see here the GFC, we had over, say, a 5-6 week, longer, sorry, a couple months, you had continued downside. So just be prepared for that. Now, looking at the daily chart, we can get a bit more of an idea in terms of time frame, I guess, what could happen. So the market closed on Friday, right, on a high, right, and it's basically, this is a lot of resistance. This is going to be really, really hard to get through. So I don't see this going much more higher, all right. If it does, then we'll see how we go from there. But this is really setting up to be a sell-off, okay? The buying on Friday was barely nothing at all. It was well below average, right? The previous days we had a lot more selling, okay? So just get ready for what's to come. The NASDAQ, right? Now, keep an eye on the NASDAQ, right? And the IWM. I think the IWM has given confirmation of a sell-off, okay? Actually, we had a big bullish day, so that's interesting. So we had a big bullish day on Friday. We went above the moving averages. A lot of buying, good volume. So what this tells me is that this usually tells us that we might see more upside. The IWM leads the market, like the NASDAQ, all right? So whenever you see the IWM move, the S&P and the other indices tend to follow, right? Because that's where all the risk assets go, right? So basically, IWM is the 2000 index, so it's mostly all the small companies, right? And you should know that the smaller companies, tend to have the bigger percentage gains. If there's news coming out or something, whatever the case may be, they usually tend to have bigger moves because they're smaller in size and so forth. Whereas if you've got a BHP built, how often are you going to see it rise from say $40 to $60 in a matter of days, right? It's pretty hard for that to happen. So that's why a lot of the risk money goes into these stocks early, right? Which tends to lead the market early. But at the same time, when they're looking to get out, the smart money tends to get out a lot earlier than the other major stock indices. Okay, and then those ones tend to follow. That's why the IWM is pretty important. So if we see another continued move to the upside, then we might still see some upside in the S&P, right? But just looking at this, it just doesn't seem like it. But nothing seems to surprise me these days with this. So we could still see some upside. We might see a retracement. This is what could happen. So we've come back up and we opened here. We closed up there. So we could see just a retracement. Where are we? We could see a retracement down to, say, 2037 level, roughly around there. That's pretty good support. and then we might see a move to the upside. Now, this could all happen during the Asia session and early in the London session, right, tomorrow. So we could see a bit of a move down, and then as we head into the New York session, right, around 10:30, 11 p.m., we might see a snap reversal. Okay, that's what could happen, right? This is just by looking at the chart, okay? Because the IWM doesn't trade during there's no future, doesn't trade during the Asia Asia session, the futures anyway. I don't think the futures trade that time. So during that time, the S&P still trades in the futures. So they could still be trading, and it could still be a sell-off down. And then as the market opens for the New York session, we'll obviously probably see a snap rally, which is also in line with the IWM, because this is a classic continuation move to the upside. So we could see that happen. The other one's the NASDAQ, because the NASDAQ's still very bullish as well, I think, from what I saw the other day. The other thing about the NASDAQ is it's the only it's the only stock index that hasn't done the cross yet. We haven't seen this crossover yet, right, that we've seen with the other ones. So here you can see .com, this is a big one. This is the .com. The NASDAQ was the biggest one impacted, lost pretty much almost 80% of its value. And then we had another one in GFC around here, right? So this one hasn't crossed yet. So this is quite interesting. So this tells me that we might still see some upside in the NASDAQ. There's still some money coming in there. But when this falls, this is going to fall really, really, really hard. So this kind of gives me... Look, I don't wish this to happen. Like, as far as I'm concerned, I want this to go on as long as it can, right? Because then I can build more money so I can play it short. But either way, this will come. This is inevitable. It's a mathematical certainty that this will fall, right? So there you can see here we've got a bit of consolidation. So based on this pattern, we're going to see some downside, but like I said, we might still see another move to the upside, at least to test the 100-day moving average, right? And on the daily, it's already crossed, right? So that's interesting there. So when we crossed below here, we crossed into here, we saw this down move there, and now we've crossed above that. So we look like we're going to see some upside, but if you look really closely, this is heading down, right? You can see this line's heading down, right? It's kind of on a downward move. This would have to keep going up like that, right? Now, if this starts to head down like this, right, you're going to see a pretty nasty crossover at some point. So keep that in mind, because we could, I wouldn't be buying and holding this, because this is still very risky territory. So that's that there. Really, that's all I really want to show you. I might show you the Aussie market. Aussie market's pretty boring, so there's not really much to look at. But let's have a look and see if we get the similar. Yeah, you can see there's the crossover there. We had a lot of crossovers actually, but Aussie market's primed for a big move down as well. So this is setting up to be. Like I said, this is one of those typical patterns I see all the time, right? Which is like a move up, down, like that. This kind of consolidated move, and then we don't be surprised you see some upside, right? If we see some upside, good shorting opportunity down for a down move down. Okay. All right, I'll leave it at that. I don't want to take too long because my videos tend to take a while, so I'll leave it at that. I'll talk to you guys soon. Best of luck. Cheers.